Hello, traders. FX Pip Collector here. Today is Thursday, March 21st, and I'm going to be analyzing the Aussie US dollar starting on the monthly, working my way down to the 1 hour time frame for the full top-down analysis. So on the Aussie dollar, I'm definitely still looking at this as a W, 1, 2, 3, 1, 2, 3 for the X. I still think it's going to make 1, 2, 3 up for the wave C, ABC of wave Y. Most likely still going to take out these highs and end up all the way up to one of these higher Fibonacci extension levels to make a ABC of wave Y. So going down to the weekly time frame, I still suspect that this right here really is going up already. I think this is possibly at 1. I think this is possibly at wave 2. The question is whether or not the wave 2 is over. A lot of the dollar pairs to me do look like they could possibly go down more before they go up. Maybe even go down to the 78.6, finish off a wave 2, and then later on go up for a wave 3. So let's take a look at it on the weekly time frame. On the weekly time frame, like I said, I'm kind of suspicious about this move up that we got yesterday. To me, this looks more like a trend. To me, this looks more like an ABC crescent, like this is an A, like this is a B. This move up is kind of convincing that it might just keep on going up, but to me, it kind of looks like it could be part of a crescent to the downtrend, and it could make a lower high. And like I was showing on the higher time phase, maybe even go all the way down to the 78.6 to finish off a wave C of wave 2 before it just keeps on trending up. Now, there's always a possibility, like I was saying last week, that the ABC crescent is over and it just keeps on making higher highs, higher lows from here. So we definitely do need to be aware of that. So let's head down to the 4-hour time frame. On the 4-hour time frame, like I said, I mean, it looks like an ABC crescent. It looks like it's going back up, but the higher time frames definitely make me a little suspicious. We do have a bounce off to 78%. We do have a break of structure on the lower time frames. You would think that it would at least make a three-way pullback. And if it does make a three-way pullback and a pulse to move up, then that would obviously tell us it's going up, and we would definitely go long for the continuation of the uptrend. But even though this is a very strong move to the upside, I am kind of suspicious of it. I kind of feel like it could possibly just keep on going down, which we do have a solution for that on the shorter time frames. Going down to the 1 hour time frame, I mean, we definitely got a break to the downside on this move. We definitely got breaks of structure. I would say that this uptrend is over. And if it really is a wave C, then this will now start a downtrend to the and start making lower lows, lower highs like that. So what I would do is, obviously this is either a wave A or a wave 1. This move up is either a wave B or a wave 2. If you could see a lower high and it starts to go down, then I would go short. And then if it goes down, makes a wave C, makes a break of structure to the upside, I would exit my shorts and go long for the continuation of the uptrend. Or if it's a wave 3, which is definitely possible, then it will not break structure, but instead it'll just make a very impulsive move with lower lows, lower highs. And if that's the case, you would just stay short and enjoy the profit. So I would definitely go short at the end of this move right here, and then you would learn or earn at the same time, whether you're looking at a wave C, which will look like this, with a break of structure to the upside, or whether it's a wave 3 and it doesn't break structure and it just keeps on making lower lows, lower highs and continues the downtrend. So learning and earning at the same time is definitely my favorite way to go. So don't forget to join my free Discord channel linked in the card up here above, and don't forget to check out my brand new website linked down here in the corner. So, as always, thanks and happy trading.